Senseonics has the lower price for their product, and people are considering switching from other companies such as DexCom to Senseonics. And if you look at the market cap of Senseonics Holdings, is about 600 million. And DexCom has a market cap over 34 billion and a price to earnings over 50. You see this huge difference, 600 million, 30 billion. The stock price may go up more than 30x, 50x. And if you look at the products, at their prices, compare DexCom, their latest product, G7, with Senseonics, SENS E3. You see the price for SENS is about $200 per year. $200. And DexCom costs about, you can see here the price, it's depending on the pharmacy and the coverage, costs about $250 per month. That means over $2,500 a year. So the price of DexCom is 10 times higher than Senseonics. And you might ask yourself, what's the difference between them? Is DexCom better than Senseonics? And according to those reviews from Reddit, you can read them, they are about the same. But some people are considering switching from DexCom to SENS. They see a better value for SENS. If you read all the comments, you will see that SENS is about the same or even better than G6 and G7 from DexCom. And this seems like a great opportunity, because if you look only the market cap, as you've seen at the beginning, 600 million here and 30 billion here, there is a huge difference. And more recently, if you look at the stock price over the last 6 months, you can see that the stock price has started to rebound. 25% up, and for Senseonics, 132%, 139. There are funds that invest in an ETF, which contains more companies, Senseonics, DexCom, Medtronic, and so on. And as the market cap of Senseonics is so low, when a fund invests in that ETF, you see a huge increase in the stock price of that company that has the lowest market cap. That's normal. So, what's the difference between DexCom and Senseonics? Based on the price, Senseonics is much better, much cheaper. And also, according to these reviews, Senseonics is a winner. So we have the price and customer satisfaction. And if you compare Senseonics with the other companies, Medtronic, Abbott, you can see that Senseonics is still on top, provides the lowest price on the market. The other companies charge about $60 per month, plus they also have to pay that transmitter, $180, so the price is over $600 a year. And for the other one, Freestyle, $75 per month. That means over $700 per year. So Senseonics has the lowest price on the market. That's quite great. I've also found an article about those companies on Healthline, quite a good article. I recommend you to read it because you'll find more about this industry. Continuous glucose monitoring. And you'll find out about DexCom, which is the leader in this market. You'll find their advantages, that DexCom, their mobile app, is compatible with Apple and Android watches. And if you look at SENS, they are compatible with Apple Watch, and for Android, that connectivity is in development for a smartwatch. This is an advantage for, but as SENS is working to include their system to Android watches, smartwatches, that will be the same. So Senseonics, the advantage they have, I see, is on price. The huge advantage they have is on price. And of course, there are other companies, for instance, watch, glucose device, but it's in the early stages. So for the moment, the leaders in this market are DexCom and Senseonics with their low price. Now, DexCom has succeeded to gain more market share because what I've seen, they have a better distribution. If you look at their presentation, they have 2.9 million customers globally. And Senseonics has a few thousand. Quite small. You can see here. 6,000 patients. 6,000 patients. And DexCom close to 3 million. So that's why also the revenue and the market cap is much higher. They charge a higher price and they have more customers. But it seems that Senseonics is gaining more attraction. An increase in their patient base over 56% year over year. That's quite great. So when you look at those companies, Senseonics seems quite undervalued. And you might ask yourself why the market cap is so low. First of all, it's because of the price. Here you can see that they charge a lower price. That means the revenue won't be that high as DexCom. And second, they have a low customer base, as you've seen here. Globally, 6,000. And DexCom has over or close to 3 million. So they still have to work on distribution, invest more in marketing, and increase their customer base. They already said that their next steps are to invest in marketing to attract more customers. If they continue to do that, you'll see more customers, also the revenue will increase, and so the stock price. Now, the problem I see with this industry, but this is just my personal view, is the innovation. If you look at this industry as a whole, how it started, I mean to monitor your glucose level, to take your glycemia. First, it started with a needle, a sting. Then, DexCom, a sensor implanted in your arm, also a sting. And then there are those non-invasive glucose monitoring, emerging technologies. Some examples, GlucoTrack and Quatch glucose. And if you look at this Quatch glucose, or how you want to pronounce it, K-Watch, you can see that a simple watch, and under that watch, they use a skin taste technology. This one with white, which consists of an array of microdots and biosensors. This one, tiny one. And these microdots will measure glucose painlessly through the skin. And of course, the patch has to be replaced after 7 days of use. So this, I see it as a much better improvement. If they can also increase this replacement from 7 days to 30 days or some months, 6 months, that will be quite a big step ahead. And imagine if someone develops a new technology that is much easier to apply it to your skin, to your arm, by wearing a watch, then all those companies that are charging over 2,000 a year will suffer. People will no longer continue to buy their products and they will switch to something much better, much convenient. Of course, for the moment, this technology is in the early stages because they also face some challenges: accuracy, reliability, and also requires calibration from time to time. So they are in the early stages. And of course, besides this, microdots, they're also researching other alternatives. For instance, optical. And you no longer need a microdots or a microdot. Some optical that make the difference between your molecule of glucose and others. And if they can achieve that, and you can wear it on your watch easily without having no needles, then imagine what will be the future for this industry. It's like you buy an Apple Watch, no needles, and it can measure your glycemic level. And that will be quite a step ahead, a breakthrough. So you also have to be aware of the emerging technologies. Don't go ahead and say that DexCom and Senseonics are the leaders in this market. They will change. They might lower the prices and they might face other competitors. And it's up to you. What I see from my analysis, from Senseonics and DexCom, and of course the industry as a whole, Senseonics seems quite low at the current market cap. Of course, they also have a lot of dilution, and that's why the stock price have declined so much. But if they focus on improving their products, they can surpass DexCom. But also be aware of their distribution channel. DexCom for the moment has a better distribution channel. But Senseonics with low prices, they can increase that market share easily. So that's my comparison between Senseonics and DexCom. And if you have other questions, please let me know in the comments.